Welcome to another edition of Focus on Alternatives, an educational partnership between Real Assets Advisor and Adisa. Today we have David Becker. He is the Managing Director at Time Equities, and we're going to be talking about contrarian investing when it comes to real estate. So David, let me kick it off. What does it mean to be a contrarian investor?
So to me, a lot of times what happens with contrarian thinking is really going against the grain. And I always think about the comment that Warren Buffett said, which is be greedy when people are fearful and fearful when people are greedy. And a lot of times, I think a contrarian investor can really benefit from essentially going against the grain and staying away from what might be the flavor of the month in the real estate investment business. Some examples of contrarian investing would be to go into an asset class that is out of favor at the moment. One example would be retail, obviously with the Amazon effect, sort of going against the grain because people are afraid of retail, or possibly suburban office because people are trending back into the city urban office environment. And so you're able to typically get higher yields and a lower price per square foot based on going back towards thinking sort of against what the masses are thinking.
That's helpful. That kind of lays the groundwork. What are some misconceptions when it comes to this type of investing?
The first one I always think about is the concept of location versus price. Typically, people in the real estate business think about location. Contrarian investor really is thinking about price. And they're trying to really catch the investment acquisition at a time where you're low on the price point of its historical background. So I always think about it in terms of price is more important than location, with the idea that when things recover and become more favorable and things move in and out of cycles, you're able to benefit from the price that you paid. One of the things that we always say is that we'd rather buy something at the imperfect price and have room for upside than buy something at the perfect price, because one thing is for certain, when you buy something at the perfect price, you really only can go one way, which is down.
There you go. So, and you referenced cycles, which is true. There's real estate cycles, but then there's also cycles within specific sectors. Where are you seeing opportunities today for contrarian investing?
So one of the things that's happening is Europe has become very interesting. There's a lot of political instability in Europe, particularly Western Europe, where essentially a lot of the governments have over-leveraged, they're in high debt amounts, and so it's caused real estate dips in various countries throughout Western Europe. It's select countries, so there are opportunities in places, let's say like Italy or possibly the Netherlands, where the local investors essentially have been beaten up from the environment that they're in now, and so there can be an opportunity to look at an asset on a price per square foot basis with the idea that those countries will return to their some normal sense of success once the economy rebounds. So that's one area that I would tell you is of interest, although you always have to be careful about the political stability in other countries. But there are opportunities there if you're careful. Another would be in the office space, in the suburban office space, where you can buy suburban office buildings, typically around 25 or 30 or 40% of replacement costs, at reasonable returns if they have a low to mid-range occupancy. A lot of the trending and the pricing has gone towards the major 24/7 cities. So when you can go into sort of those secondary markets or suburban markets and buy decent returns at decent price per square foot that have long-term value, we've found that to be one interesting opportunity. And the third would be retail, which of course everyone is concerned about the online effect it's having on local retail centers. So what's happened is it's created a lot of fear in those, in the pricing of those assets. And so a lot of times you're able to go in and get double-digit investment returns for things that were selling at mid-cap rate returns, mid-teen cap rate returns only 24 months ago. So we see that as an opportunity. And the fourth would be a contrarian view on industrial, which is that most people are thinking, certainly the masses are thinking, that the industrial pricing is much more aggressive and competitive on the single tenant large industrial distribution centers. Although one of the things that we find contrarian is multi-tenant industrial, where those businesses are benefiting from the economy that they're in with the online and the distribution dynamics and the general economy growth, and obviously having a lesser risk profile with multiple tenants is better, and we're finding that typically you can get higher investment returns for those.
So this makes a lot of sense that you're buying things that are out of favor and waiting for them to turn around. But what if you're wrong? What are the challenges with contrarian investing?
Typically, the number one challenge is financing. If you're a contrarian investor, you really have to be in a position to buy and hold all cash. There could be a time where it can become financeable again, and that's hopefully what you're moving towards. But to take advantage of the pricing, typically what happens is the banks are moving with the trends of the market, and so certain investment profiles are not financeable, whether it's location or asset class. And so you really have to be in a position where you can go in cash and be in a position to hold through that cycle period until that asset class returns to favor. And typically, banks' financing is one of the largest challenges. I remember when I was young, one of the things that I was told by a very astute real estate investor was, if you want to make money in the real estate business, buy from the banks and the municipalities. And a lot of times if you act sort of in an adverse position to what the banks are operating at, you sort of are automatically a contrarian investor. And it's one of the things that I've learned over time that you can be very successful from.
Well, there's a lot of different ways to make money. You can growth plays, income plays. Thank you for walking us through contrarian investing. So appreciate that, David. And thank you for watching another edition of Focus on Alternatives. For more information about alternative investments and real estate investing, please visit realassets.advisor.com or adisa.org. Thank you.